Listen to this. A French crypto investor made 30,000 euros on Bitcoin last year. He sold it for euros and paid 9,420 euros in tax. His friend made the same 30,000 euros but converted it to USDT instead and paid nothing in tax. Same country, same profit. One guy knew how French tax law actually works, the other didn't. You should know that France has one of the most interesting crypto tax systems in Europe. It can work massively in your favor or absolutely destroy you, depending on whether you understand a few key rules. In this video, I'm showing you exactly what I do to minimize crypto taxes in France and the mistakes that'll cost you thousands. France is fascinating for crypto investors. Some rules are incredibly generous, others will catch you off guard. So, here's what I'm covering: the 31.4% flat tax and how to delay it, why crypto to crypto trades are your best friend, the 305 euro threshold that most people ignore, staking and mining rules, the progressive tax option that could save you thousands, and a new 2026 rule that changes everything. Let's go. The first thing you need to understand: France uses a flat tax on crypto called the PFU, Prélèvement Forfaitaire Unique. As of January 2026, that rate is 31.4%. That's 12.8% income tax plus 18.6% social security contributions. It doesn't matter if you made 1,000 or 1 million euros in profit, it is always 31.4%. France doesn't have a holding period benefit like Germany, so whether you hold for 1 day or 10 years, it will be the same rate. That sounds worse than Germany, right? And for long-term holders, it is. But France has something that Germany doesn't, something incredibly powerful. In France, trading one cryptocurrency for another is not a taxable event. Swapping Bitcoin to Ethereum, not taxable. Swapping ETH to Solana, not taxable. Swapping Solana to USDT, not taxable. The only thing that triggers tax is converting crypto to fiat currency. Take a second to think about what that really means. In Germany, if you trade Bitcoin for Ethereum, that's a taxable sale. Your holding period resets to 0 and you might owe thousands. In France, you can trade all day long. You can rotate positions, rebalance your portfolio. As long as you never touch fiat, you owe nothing. This is massive for active traders, and here's where it gets really interesting. Let's say Bitcoin is at an all-time high. You want to lock in your profits. In a lot of countries, selling your crypto for stable will trigger a tax event. But in France, it doesn't. You've effectively cashed out at the top. Your value is locked to the dollar, but because USDT is still crypto, it's not taxable. You can sit in stablecoins for as long as you want and then convert to euros whenever you're ready to actually realize the gains for tax purposes. This isn't a loophole. This is how the law works in France. Let's put this into some real numbers so you can see how this will work in real life. Say I bought 20,000 euros of Bitcoin. It's now worth 50,000 euros. Hooray! I have two options. Option number 1, sell for euros. My gain will be 30,000 euros. I'll be taxed at 31.4% and I'll have to pay 9,420 euros in taxes. I get to keep 40,580 euros. Option number 2, I sell for USDT. Again, my gain is 30,000 euros on paper, but because I sold for a stablecoin, I don't have to pay anything in taxes. I get to keep the full 50,000 euros in value. I can now strategically decide when to convert this to fiat and pay the tax. I'm not avoiding the tax forever, but I am controlling when I pay it, and that matters. Okay, so what about small gains? France has a 305 euro annual exemption. If your total capital gains from crypto to fiat conversions are under 305 in a year, you pay zero tax. But, and this is important, you still have to report it. Even if it's 10 euros in gains, you have to declare it. And just like Germany's 1,000 euros exemption, this is a cliff, not a slope. What does that mean? 305 euros in gains is tax-free. 306 euros, you pay 31.4% on the entire 306 euros, not just the €1 that you're over. If I'm a small investor and I only need to cash out a little bit each year, then I'm not cashing out anything over 305 euros. I will be keeping my gains in stablecoins. Now, here's something most French crypto investors don't know exists. Since 2024, you can choose to ditch the 31.4% flat tax and instead opt for progressive income tax rates. Why would you do this? Let's take a look at the math. France's progressive income tax brackets look like this. Anything up to 11,509 euros is taxed at 0%. Everything between 11,510 to 28,797 euros is taxed at 11%. Everything between 28,798 to 82,341 euros is taxed at 30%. Everything between 82,342 to 177,106 euros is taxed at 41%, and everything above that is taxed at 45%. But here's a catch. Even with progressive rates, you still pay the 17.2% Social Security on top. So let's run the numbers. If your total income, including crypto, is under 11,509, you are paying 0% income tax, but 17.2% for your social contributions. However, this is still miles better than 31.4% flat tax. Even if you are in the 11% tax bracket, your total percentage is still below 31.4%. So, who should use these progressive rates? Well, it's very simple. If your total taxable income is under roughly 28,000 euros, progressive rates are going to save you money. Students, part-time workers, people between jobs, early retirees. If you have a low income and you have crypto gains, this is worth looking into. If your income is above 30,000 euros, you're better off sticking with the flat tax. Progressive rates will cost you more. So, here's what I would do. I would calculate both options every year before I file my taxes. Run the numbers with the flat tax, run them with progressive rates, pick whichever is lower. And if you are getting a little confused about how this is possible, France actually lets you choose which one to go with. You can literally choose to pay less taxes. Now, let's talk about where people mess up. Yes, crypto to crypto is tax-free. But there are situations where you think it's crypto to crypto and it's actually counted as a fiat event. When you spend crypto on goods or services, this is treated as converting to fiat. So if you are buying a coffee with Bitcoin, that is a taxable event. The value of that coffee in euros is your sale price. Did you pay your assistant in crypto? Same thing, taxable. The only safe trades are crypto to crypto on exchanges. The moment crypto buys something in the real world, tax applies. And this is where France gets so complicated. France doesn't use first in, first out like Germany. France uses a global portfolio method. Here's what that means. When you sell, your taxable gain isn't just sale price minus purchase price for those specific coins. It is calculated against your entire portfolio value. The formula is this. Your gain equals the selling price minus the total acquisition cost times the amount sold divided by the total portfolio value. Let me show you why this matters. Let's say you've invested a total of 10,000 euros into crypto over time. Your entire portfolio is now worth 50,000 euros. You swap 5,000 worth into euros. Your taxable gain is not based on which specific coins you sold. It is 5,000 minus 10,000 times 5,000 divided by 50,000, which leaves 5,000 minus 1,000, which is a 4,000 taxable gain, which then in turn means you're paying 1,256 euros in tax if you are getting taxed at the flat rate. Whew, that was a mouthful. This means you need to track your total portfolio value and total acquisition costs at all times, not individual coins, the whole portfolio. And this is exactly where most people's heads explode, including mine. The global portfolio method means you can't just track individual trades. You have to know your total acquisition cost, total portfolio value at the moment of each fiat conversion, and calculate the proportional gain. This is why I recommend BlockPit. It tracks your total portfolio value across every exchange and wallet, applies the French global portfolio method automatically, and it will generate what you need for Form 2086. When you have 50 plus transactions across multiple platforms, calculating this manually is asking for errors. BlockPit does it in minutes, and since 2026 with the DAC8 requiring exchanges to report everything to French tax authorities, you want your numbers to match exactly. The link for BlockPit is in the description below. Quick one, drop portfolio in the comments if the global portfolio method already gave you a headache. I guarantee you're not alone. Okay, let's talk about staking and mining. This is where France gets a little harsh. If you earn crypto from staking, mining, lending, or airdrops tied to an activity, this isn't taxed at the 31.4% flat rate. It is classified as non-commercial profits, and it is taxed at progressive income tax rate up to 45% plus social contributions. There is one saving grace, the micro BNC regime. If your total income from staking and mining is under 77,700 euros per year, you qualify for 34% automatic deduction. That means only 66% of your staking income is taxable. Let's put some numbers to this because we all love numbers. You earn 10,000 euros in staking rewards over the year. With micro BNC, you get a 34% deduction, which is 3,400 euros. So your taxable amount is actually 6,600. If you're in the 30% bracket, that is 1,980 income tax plus your social contributions. Without micro BNC, so if you're above 77,700 euros, that full 10,000 euros is taxable. You could face 41 to 45% rates plus your social contributions. You will potentially have to pay over 5,000 euros in tax. So what would I do? In France, I'd be very careful with staking and mining. If I'm staking, I'm making sure I qualify for that micro BNC and that 34% deduction. And I'm seriously questioning whether the yield is worth the tax complexity. We're almost done, guys. Let's cover losses and what you can do with your losses. In France, if you sell crypto for fiat at a loss, you can offset that loss against your gains in the same year. And if your total gains for the year are negative, you simply don't get taxed. Pretty simple. Unfortunately, you cannot carry those losses over to another tax year. Losses only help you in the year that they happen. You basically have to use them or lose them. So if you have gains and losses in the same year, make sure you realize the losses before December 31. Now, there is one thing I need to make you aware of. Since January 1st, 2026, every crypto exchange in Europe is required to collect and report your transaction data directly to the French tax authorities. This isn't theoretical. It is happening right now. Every buy, every sell, every transfer, Binance, Kraken, Coinbase, they are all sending this data to the French tax office. If your own declaration doesn't match what the exchanges are telling them, you're going to get flagged. And don't forget, you must declare every single crypto account held on a platform outside of France using Form 3916 bis, even if the account has zero balance. Even if you made no trades, you will get a fine of 750 euros per undeclared account. It can even go up to 1,500 euros if the value in those accounts is significant. And one more thing. In late 2025, France's National Assembly voted to expand the wealth tax to include crypto holdings. This would tax unrealized gains, meaning crypto you haven't even sold yet. Now, this hasn't become law yet. It still needs to pass the Senate, but it passed the Assembly by 163 to 150 votes. This is actively moving through Parliament. If this passes, holding crypto in France becomes significantly less attractive. I'll do a dedicated video when there's an update on this, but I feel you need to be aware that this is on the table. Alright, now let's bring everything together. If I were managing crypto taxes in France, here's my exact step-by-step playbook. Step 1, I would never convert to fiat unless necessary. Every fiat conversion triggers 31.4% tax. So I'm staying in crypto as long as possible. I'm only going to convert to euros when I actually need the money in my bank account. If I just want to secure my profits, I'm swapping to stablecoins instead. Step number 2, stay under 305 euros if I'm a small investor. If I'm a small investor, I'm planning my fiat conversions to stay under 305 euros per year. It's not much, but is completely tax-free. Step number 3, run the progressive tax calculation every year before filing. I'm calculating both options. Flat tax at 31.4%, progressive rates plus 17.2% social contributions. If my total income is under 28,000 euros, progressive rates probably save me money. Step number 4, be extremely careful with staking. If I'm going to be staking, I'm going to be making sure that I am under the 77,700 euros micro BNC threshold for the 34% reduction. But honestly, in France, pure holding and trading is taxed at 31.4%. Staking can be taxed at 50+%. The math speaks for itself. I probably wouldn't touch staking. Step number 5, realize losses in the same years as my gains. Because you can't carry losses forward in France, I'm making sure to realize those losses before December 31st so I can be really efficient with my taxes. Step number 6, declare everything. With DAC8 active, the tax office knows what you're doing. Your job is to make sure your declaration matches perfectly. I'm not risking getting a 1,500 euro fine per unreported account. Step number 7, track my total portfolio value. France's global portfolio method means I need my total acquisition cost and total portfolio value tracked at all times. This is not optional, it's how the gain calculation works. Software like Blockpit handles this automatically. Manually, it's a bit of a spreadsheet nightmare. And that's everything I would do to handle my crypto taxes in France. If this helped, then please hit the like button. It would help so many more people find this video. And remember to subscribe to stay up to date with any new tax rules that France will come up with, including that wealth tax. Let me know if you have any questions regarding crypto taxes. I read all of your comments and it will decide what topic I cover next. And look, I am not a tax advisor. This is purely for education, not personal advice. French tax law is complex. If you have got a serious portfolio, talk to a professional. But hey, at least now you know the right questions to ask.